What is up, guys? In today's video, we're going to be talking about a few things. Alright, the first of these is the Elliott wave theory. Then we're going to talk about divergence. And finally, we're going to talk about a little bit about support and resistance lines, okay? So all of these things incorporate into our strategy here at Forex Breeze. This is for y'all who want to know how to trade the strategy, right? It involves trend, hidden divergence, and some pretty common reversal patterns, which is part of the technical analysis, right? And that's literally all you need. Just those two things and good risk management, and you'll be set in the markets. All right. So the first thing we're going to talk about is Elliott wave theory, and literally it's this simple: 1, 2, 3, 4, 5. Right? We have one move up, then a little down, up, down, up. Okay. And later in this video, you're going to be understanding how this can help us in the markets. Right? For example, if I place a line here, you're going to notice it's a support and now resistance. So if you buy here, the market will go up. Or if I place a Fibonacci retracement, you're going to notice it hits pretty close to the 50 line and then shoots right back on up. Now imagine if we combine it into something kind of like this. Look at that. Not only do you get two confirmations, we're in an uptrend, and if we have a divergence, a hidden bullish divergence right here, this is an amazing trade. So let's see if we can incorporate these things into more real-life examples. So the reason I said this is very important to this strategy is because it helps us identify a trend, right? A trend is usually when you have, or an uptrend is when you have higher highs and higher lows. Now, what is a downtrend? When you have lower highs and lower lows, okay? That pretty much, for a downtrend, looks something like this. You have one move down, little move up, bigger move down, little move up, something like this, right? This is a downtrend because price is going downwards. We're having lower highs and lower lows. Now this example on the left side, we have an uptrend, right? And on this side, we have a downtrend, okay? So now with that being said, here's what we can see from this. Right here, we have something what's known as an impulsive wave. Impulsive means it's going in the trend's direction, right? So we have an impulsive up. Corrective means price is correcting a little bit, and then price goes up, corrects, impulses, and that's the Elliott wave right there, right? And in this case, we see one of the common reversal patterns known as a double top before price goes right back down. And it goes in an Elliott wave on the way down. 1, 2, 3, 4, 5, right? It's not always going to be 5. It can be more. But the goal of this is to identify a trend. Now, in more real-life examples, you're going to have something like this without the fifth wave. Okay, so I'm just going to hide this. That way you guys can't see it. This is going to be our fourth wave. Our goal as traders is going to be knowing when this is going to stop and then head to the upside. That's our goal as traders with this strategy, right? And in this case, it's a long trade because it's an uptrend, right? The other way around would be for a downtrend, okay? So using this, we can help identify trades and trends. So this is actually a real life example, believe it or not, okay? Check this out. We see price goes up from this point. I'm ignoring all this past data, right? This kind of takes experience, so you're probably going to have to go into the charts, take a little peek at it, and start practicing a little bit, right? You're going to notice price actually goes up to here. Let me correct that real quick. All right, so price goes up, comes down, up, comes down a little bit, comes up, right? And then we see some choppiness before we see 1, 2 double top, and then it reverses to the other side. Ignore all this over here, right? We're focusing on this pattern right here. Impulse, corrective, impulse, corrective, impulse. This side, we have an impulse. This is actually corrective. Impulse, corrective, impulse, right? Now what's really cool, and this is why I see in identifying these trends and trades, you need another confluence factor, is because of this. Check this out. If I get rid of the chart, these are the lines that are left, right? The lows and highs of the market. This is what you're going to see. We're going to pull out a Fibonacci retracement. Check that out. Hits the 38 level pretty perfectly. Now let's slap that up here and get a better look on what this is, right? This one is a really shallow retracement, right? That means there's still a lot of momentum going to the upside, so we would capitalize on that, right? You know, and of course if there's a hidden divergence confirming that trade. Over here, you can actually see on this side of the chart, there was what's known as resistance, right? You see price came, touched it, and got rejected. Then here it got rejected again. It actually got a little rejection here and comes over, boom, slams it. This would be an amazing entry position for a buy. Was a stop loss right here, you know, assuming that this is a hidden divergence right here. That would be an amazing, amazing trade, right? We'd have a tight stop of 4 to 5 pips and a profit target somewhere up here at the top of these two peaks up here. You know, that means we'd have a 6, almost 7, I'll round it down to 6, right? A 6 to 1 risk reward ratio with a stop loss of 5 pips. Now tell me that isn't good. I don't know of many other traders that can get that type of risk to reward ratio. It's just really crazy what you can do with this strategy, okay? So that is Elliott wave theory, right? If you have more questions, just let me know and I'll answer them, right? You got the impulsive waves, corrective waves to identify a trend. Now, like I said, how do we use this? We have the 4 waves and we're trying to find the 5th wave, okay? That's how what I use to identify a trend, you know? Sometimes I just have to look at the charts because you're going to notice on something kind of like this, you can't really find an Elliott wave. Let me delete these for you guys real quick. You can't exactly find an Elliott wave. It's really difficult. So what do you do on something like this? Well, you kind of just look at it, honestly. What do you notice? You know, price keeps coming down and it's going to still keep coming down, right? So you can enter in little positions here. Let's say you get a divergence right here, right? Stop loss would be at the top. I'm sorry, let me make that clear. Let's pretend this is a hidden divergence, right? A hidden bearish. You know, you have trend pushing down. This is a hidden bearish, which means you'd short right around here, the literal top. Your stop loss would be set to the top of this peak up here, like that, right? And a bottom of this structure down here is going to be your take profit. And just like that, guys, there's your short trade. Close with profit, 3 to 1 risk reward, right? You didn't catch that many pips. You literally only caught a total of 13 pips. But at 3 to 1 risk reward, you just got 9% return on your account. This lot size doesn't matter. Nothing matters. If you risk 3%, your reward is 9%. That's simple, guys. That's simple. So now, that is the Elliott wave theory and how we use it. Another important thing that I get asked is, how do I use stuff like Fibonacci? All right, Fibonacci and support and resistance. So we're going to go over Fibonacci first. When it comes down to Fibonacci, it's actually fairly simple. I don't use it a lot unless I see a pretty clear highs and lows in the market, right? What do I mean by highs and lows in the market? Well, let's look on the right here, for example, right? I'm going to put little dots at the highs and lows, right? This is a low, as we can see. This right here is a high, right? Why is this here not a high? Well, because I honestly believe price pushed a lot higher than that. So I believe this is a good high. This is a low, right? Now, okay, when I see something like this, I see, okay, price went a little higher. If price goes higher than this point here, we're going to have ourselves the beginning of an uptrend. Higher highs, higher lows. The next one, of course, is right about here, right? So assuming, you know, we're using our trading strategy, this is an uptrend now. And this would be a great place to trade an order for a buy, and as we can see, it spikes up, right? That's not important. What's important is these are the highs and lows of the market. So knowing that information, let's do a few more, right? Where's the next high? This one up here, it's going to be between these 3 points, right? I'm going to put it right around here. This wick I don't like because it could have been a spike from a news event or some other factor which we cannot control. So I would probably place it around here. This is a clear low, right? This is how you identify the tops and bottoms of a market. So now let's go in with our Fibonacci tool and check this out. So this was the bottom and this was the top, right? I placed it at the wicks. What you're going to notice is price went down in between 0.5 and 0.618. This is my favorite type of retracement, and let me tell you why. Whenever price retraces into this zone right here, this little light green kind of looking zone, teal, this is known as the golden zone. If price retraces here, it is a perfect retracement and will go up, and if it does that, that's just beautiful. I don't really know why, but that's just pretty much just the magic zone a lot of the time for the market, you know? Let's look at the next one, right? Let's move these out a little bit so you guys can see. This is the low, high, low, right? We're going to draw the Fibonacci from the low of the market, which is here, to the high up here, right? This is the line that touches the high. So what are you going to notice? Price more or less dips down into right about here, 0.5 and 0.618, known as the golden zone. A lot of people on YouTube, online, will tell you this is the best zone just to buy retracement in because it's so powerful. So powerful, guys. And as you can see, the market does move up. All right. Now we're going to do one more example, right? I actually just picked this random example too. I'm not cherry picking anything for you guys. So this is the low. We're going to draw the Fibonacci here. Now where's the high? Okay, this is going to take a little bit of trial and error, right? If I'm going to enter a trade, let's say a long position right here, I'm going to be looking for a pretty good retracement or support resistance level, right? I personally see a little bit of both. So let's look at the Fibonacci retracement on this one. I drew this as the high, not the peak, not this wick. I usually do wicks, but I'm going to look at this peak and see what it is. So as we can see, you know, this is the top, and it retraces right into that zone I was telling you guys about, 0.618 and 0.5. Boom, perfect retracement, right? Let's put it up a little higher and see what it says. So in this case, even then, it still's in that same zone. So it wouldn't matter if you put it here or here because it still gets you a great entry, right? Maybe 1 or 2, 3 pips different because this is Euro USD, so it doesn't move that quick in an hour. But that's regardless of the point. You still got a great entry around this zone right here. Okay, guys? So that's really what I want to show you when it comes to Fibonacci, right? Highs and lows. You know, you can use Elliott wave theory to find it. And then you can put the Fibonacci on the low and high part of a market like that. You know, we can see right about here. And it retraces into this zone, wicks, which shows rejection. So this would be a great position for a buy right here. And ride it up. Of course, being there is hidden divergence. I'm going to look for another example. Let's just use this one right here. Okay. High. We have a high here. We got a high here and a high here. So let's put some dots on those. You know, you can use the dots if that helps you guys. I recommend doing it if you need, you know, more visualization when it comes to seeing these kinds of trending markets and such. And practice. Practice makes perfect, guys. So this is our high, this is our low. We want to see if this was a retracement. We're going to do it for all 3 of these. Okay. This first one, let's try it out. Fibonacci retracement. We're going to trace it from this high to the low, like that. Now, as you can see, this wasn't really a Fibonacci retracement. You know, it went into this zone. Once it passes 0.618, I kind of just ignore it, honestly. So that wouldn't have helped us much, right? We'd have to use other confirmation tools. So let's try the next one, right? This is our low, and this is our high. Oh, let me move it over a little bit. So what do you notice on this trade right here? Price goes from here and retraces to this area right here. The 0.5 and 0.618. Sorry guys, you guys can't really see that one that well. But it goes right to that little golden zone we were talking about. And look at it. Price just goes the other way. So let me zoom in and do the very last one that we saw here. We saw the high right here and the low is right here. And check it out, guys. Price pretty much just wicks slightly over it, but we see it's a wick, rejection, and it starts heading to the downside. Boom. Another great entry using the Fibonacci retracement tool. Okay. So as you guys can see, on the past, I don't know, 5, I guess. Here, let me put dots on these again. On the past 5 or so entries, the Fibonacci tool could be used. On the 6th one, it wasn't really that great, but we still got a winning trade in the end. All right. So that's why you got to use other confirmation tactics. The 3 I like to use are this: trend line, support and resistance lines, and the Fibonacci tool. Okay. So let's say we do have a trend, and let's say we do have a hidden divergence. The last thing we got to look for is a support resistance or some other confirmation factor that says, okay, you know what, this is a good idea. Let's do it. So in these cases, I would have used Fibonacci and, place my trade on the Fibonacci. But you can use another thing called support and resistance. Support and resistance pretty much means like a price in the market where just the bars, candles, price itself just doesn't really like. Think about it like that, right? It doesn't want to cross it. It just wants to stay away from it. Usually, it's really kind of tricky to draw these sorts of things. So I'm gonna have to zoom out to kind of find some better examples, because it's really tricky sometimes. This is the best example I can see, the most clear one for you guys, at least. I'm gonna zoom in right here, and you're gonna see 1, 2, 3, right? If you're trading with my strategy, you're going to notice that this is actually a reversal pattern. That's another thing I forgot to mention that I use, right? Reversal patterns, Fibonacci, support, resistance, and trend lines as my third confirmation. I prefer reversal patterns because they're stronger most of the time. But anywho, this is how you draw support and resistance. Pretty much where price touches a specific level multiple times. Most people say you have to have 3 touches on a support and resistance lines for it to be valid. I don't necessarily agree. I think sometimes even 1 or 2 touches is good enough, depending on where you're placing your trade. So, we see here we got 1, 2, 3 touch, right? This actually has more than one confirmation. Let's say we had hidden bullish divergence, right? We have a triple bottom, which is a reversal pattern. So that's one. Let me tally that. That's one entry reason. The next entry reason is a support line, 2 entry reason. The next reason is that we got our, let's pretend, hidden divergence. That's a 3rd entry reason. The 4th entry reason is I see prices kind of trending up and then bouncing off. So that's a trend confirmation right there. And maybe if we can find something, we can maybe find some kind of trend line. I don't know. I don't want to look back. But that's pretty much, you guys get the gist right there. You have 4 entry reasons now to enter into this trade. It's starting to uptrend. Triple bottom reversal pattern. Support and resistance line. And your hidden divergence, which is the strongest thing you'll ever get. And bingo bongo, as you guys can see, it goes up one hell of a lot. Alright, I wouldn't have held it that long, because I'm not exactly that patient, but you guys get the gist. That is pretty much how simple it is, guys, when it comes to support and resistance lines. Let me see if I can find some kind of trade example entry. So this one, I actually remember seeing this one time a while ago, and this was actually a trade entry. So let me move these little guys for you so you guys can see. This was actually, believe it or not, a hidden bullish divergence, right? Using our strategy that I teach you guys, this down here would have been your stop loss, this red line. Let's pretend that's your stop loss. This is going to be your entry, and then top of structure is going to be take profit. So let me change the colors so it's a lot easier for you guys. Green, that's our take profit. White's going to be our entry. Oh, shoot. Hold on. Chart's white. Black's going to be our entry. And this is going to be our little divergence. I'm going to do light blue, or darker blue. That way you guys can see it really well. Alright. So now we have to know, okay, where are we going to enter in this damn trade? We have our hidden divergence confirmation. We know our divergence is coming from here, so this is our stop loss, right? About a 1-to-1 risk-reward ratio. We got to know where to enter. The lower we enter, the bigger our reward is, the smaller our risk is. It is just like that, guys. So, let's try to figure out where to put this black line. First thing we're going to look for is Elliott wave. Yes, it is trending up as I look at it. When I look at this, I see, okay, yes, it's trending to the upside. All right. Next thing I'm going to look for is divergence. Yeah, I got the divergence. All right. Now we can look for extra confirmations on where to enter. So what do I notice is here. Let me do this line in orange. These are going to be our support zone. I see price. Touch this, wick, rejection. Rejection. Okay. So I'm thinking, you know what? This could be a good zone. Right? I also see this area right here where price went up, rejection. So I'm going to put a little line here as well, right? This is only like one touch pretty much. You have 1, 2, I guess, but it's going to reverse somewhere in this zone, and we both know it. So, we have a general zone where it's kind of going to reverse, and we want to kind of get in down here. The bottom of it would be nice. So let's slap on a Fibonacci retracement, shall we? From the bottom to the top. Look at that, guys. We have, hold on, the 0.5 and 0.618 zone right in the middle. So now let's lower these lines a little bit to accommodate that factor. So now we got a little bit of a tighter zone, right? If you guys look to the chart over here, it's 9 pips zone. That's pretty small for an entry. So now we have our 4 confirmation factors. So let's watch what happens. Boom. Guess what that is, guys? That is called a doji, I'm pretty sure. I'm not too big on Japanese candlestick patterns, but from my knowledge, this is actually a reversal candlestick, which means price is going to start going up. So after this, I enter my trade on the close. Remember that, guys. You only want to enter the trade when price closes, all right? That's actually another secret I learned, because sometimes price will spike halfway through the hour and the hidden divergence is instantly invalidated. So yes, you are going to not get as many pips, maybe a little smaller risk-reward ratio, but guess what? You're not going to lose as many, nearly as many, and I promise you that. And guess what, guys? Came down a little and boom, spiked up. Take profit every day, all day. So if you guys have any questions about Fibonacci, support and resistance, or anything, please let me know. I can send you guys other links of other videos, see if they can teach it better than me, because I'm not the best teacher sometimes, but yeah, I try my best. Let me know if you guys need any more help, and let's go get some pips, guys. Thanks for watching.